You're a first-time home buyer and you want to know exactly what the processes are and how you can get funding from the government for your property. Don't worry, Twitchy's got you covered. What's up everyone, my name is Dujesh, and as you know, I am a principal realtor. I've been in the industry for 9 years through sales, developments, rentals, and sectional title management. Alright, and today's video is pretty much going to cover the first-time home buyers process as well as the Flisp application subsidy. So right off the bat, let me start with the most important thing. If you're a home buyer and you've never purchased a property before, there's a couple of steps that you need to know and a couple of cost factors that come into play apart from the actual home loan itself. First of all, what you're going to need to do is you're going to need to obtain an affordability assessment, or what we like to call a pre-approval. You go to the bank, so it can be your banker, your private banker, a bond originator. Remember, bond originators shop at all the banks to try and get you the best rate possible as well as the best interest rate. And then you go to the bank and they would take the following documents to perform the criteria and affordability. And those documents are your bank statement, your payslip, as well as checking your credit score. So you'd have to fill in a couple of forms, and after submitting those documents, they would do a check to see the affordability. They basically just look at your credit score. They look at the type of interest that you're going to get as well through the credit bureau, and this would give a pre-approval for you as a client. And this pre-approval will stipulate this is the maximum you can purchase for, and the repayments if you purchase at a specific price, as well as the percentage rate or the interest rate that you might get from the bank. Now remember, pre-approval is not an actual approval. It is still subject to further credit checks upon the final application. So you're going to want to be really careful on what you actually purchase in terms of credit from the time you get your pre-approval till the time you make the actual application. Then what you're going to want to do is you're going to then want to look for various properties. Now there's a number of ways in which you can do this. If you have a very good friend, buddy, or someone that you trust that's a real estate agent that's very knowledgeable like me, you will then obviously approach this person and ask for advice, and ask them to represent you as the buyer's agent. And that broker will then obviously look at various properties, look at probably properties that he has or she has on the market, and look at other brokers' properties within their office or in other companies, and try and get you the best possible deal. What you can also do is approach websites like Property24, Private Property, and these websites can, it's endless, it's limitless. You can search for the number of bedrooms you want, the area, the price range, as well as whether you want commercial, townhouse, apartments, land, you name it. There's various search criteria. What happens when you find the property that you want? Okay, the process is quite simple. You find a property that you like, and this could either be a private sale or could be through an agent. By the way, I do recommend that you always work with an agent that knows what they are doing, that's qualified, because they will break down the legal clauses in the real estate transaction and your offer to purchase. So anyways, you find the property that you like, and then what happens is that you will then put an offer on the table, and this offer will stipulate the price that you're willing to purchase the property at. So let's just say you see a property for R1 million and you're only willing to put 950,000 on that property. You can then stipulate that on the offer to purchase. You write it down, you sign it, you give the seller a period of time to accept that offer, and then the agent or the seller, if it's a private sale, will then look at that offer and either choose to accept or reject the offer. What are some of the costs involved should you get that offer accepted? So some of the costs that you as a buyer are going to incur is that you have to obviously have a deposit. Now, some banks may give you 100% bond, but your deposit is usually about 10% that you've got to give, because the banks will give about a 90% deposit. So just it's all a matter of checking with the bank and seeing whether you get 100%, or whether it's a 90% deposit, 90% approval on the property with a 10% deposit. Also, a couple of the other cost factors that you're going to incur is you're going to incur transfer fees. Yes, an attorney will need to obviously transfer the property from the current owner to you, and there's some transfer fees involved in that, and you're going to want to look at those transfer fees, and it's based on the attorneys that you use. Transfer fees vary on the price of property. Transfer duty is also only applicable for properties over $1 million at this point. It kind of changes every year. At some point it was 750,000. I think about 2 years ago it was about 900,000. Now it's $1 million plus. So if you're buying any property below $1 million, you won't have to pay transfer duty. But if it's over $1 million, you'll have to pay transfer duty. So those are the major costs that you'll incur as a buyer. But what about some sort of assistance? I mean, you are a first-time home buyer. You would need some sort of assistance, or you probably want some sort of assistance from the government. Now, I know there's a lot of things with regards to the government departments and getting finances and subsidies in place from the government, and the process is very long. But needless to say, the Flisp subsidy is there for first-time home buyers. What does Flisp stand for? It's basically finance linked subsidy program. Right, and what happens is, if you fit the criteria, which is earning between 3 to about 3,000 to 22,000 a month, you're over 18 years of age, you have not owned a property before, you may qualify for the Flisp subsidy. The subsidy goes up to about 100,000. It depends on how much you earn. Obviously, the more you earn, the less of a subsidy you'll get, and that's linked to your home loan. So you would need to fill out the Flisp application forms, which would require some details, and then when you submit your offer to purchase to the bank, you would also submit the Flisp forms with the bank, and their consultants can assist you, or the bond originator can assist you. Alternatively, you can email it to Flisp itself, and what will happen is, let's just say you are and okay for that application and that amount. They will say to you, all right, you've qualified for 50,000. We're going to put that 50,000 towards the home loan amount. So if your home loan was for $1 million and you've put, let's just say, 100,000 deposit, and you then gonna basically have a home loan of a balance of 900,000, you're gonna have 50,000 from Flisp. It's gonna go towards your 900,000, and that would give you an outstanding balance of 850,000, which would be your new home loan repayment to pay on. So how long can you take a home loan? If you take a home loan, you can take it for various periods of time. You can take a home loan for 20 years, sometimes even up to 30 years. But if you have sufficient funds and you maybe you earn well and you can put extra towards your home loan account, that's perfectly fine. That should reduce your installments and reduce the period in which it takes to free up a property. I know some people who earn quite a bit that was able to take a home loan over a 5-year period and pay that off, pay a property off in 5 years. So that's probably one of the best ways in which you can free up a property. Now, what happens should you not get the Flisp subsidy? Okay, first of all, it has to be through a home loan in order to get Flisp. Secondly, if you don't qualify for the subsidy, unfortunately, there's nothing you can do. You can probably try and submit the application, but nothing can be done about that. That's why if you are looking for Flisp, it should be a by the way thing, and you shouldn't focus on it 100%. Also, there's some major delays with regards to it, so that's something that's you're gonna have to obviously incur. Now, there has been instances where Flisp has come into place after property is registered, maybe after a couple of months, And that just happens because of the delays with the department. What you're going to want to then do is you need to obviously ensure that when you've purchased your property and you're paying off your home loan, there's some other factors that you need to take into account. Take into account that this is a commitment for a long period of time. 20 to 30 years is not something that is just gonna, you're gonna pay off like then and there. You're gonna be paying it off for a long period of time. So you're gonna want to have some insurance in place in the event you probably pass away and you need to free off the property. And that's where the bank comes into play. If you don't have sufficient life cover that can be seeded, I mean seeded, I'll give you an example. You have life cover for 5 million, you purchase a property for R1 million. From the 5 million, you have 2 million in outstanding debt, and the balance of 3 million is what was going to be paid out to your beneficiaries. You can seed the balance of that, so like from the 3 million, you could seed like 1 million to your property to pay the property off. So that becomes freed off. If you don't have sufficient life cover, the bank will assist you with that, or your financial advisor would assist you with the life cover that you need to obviously pay off the property in the event of a death. And that's very important, because in the event you pass on, the property is freed off. What happens if you lose your house? So if you lose the property, remember there's a period in which you lose the property. Let's just say you couldn't pay the repayments, or you struggle. They would obviously see that you've missed some payments, and then they'd issue demand letters, and it'll go all the way through a process where they try to sell it and eventually auction it off. But in that case, you do have time to try and sell the property, should you not be able to make the repayments. And that's basically the process and some of the fees that you might incur. Remember, it all varies depending on the type of property you're purchasing, basically your area, the attorneys that you're using. When you get the Flisp subsidy, it depends on how much you're earning, and as well as the interest rate. So these factors, play a lot. And one thing to note is always keep your credit in good standing. Always keep your accounts up to date, because when applying for a home loan, they will look at various credit channels. Well, thank you to everyone that watched this video. I hope it helps. Please do like, share, and subscribe to my channel, where I'll be explaining more and giving more information. Thank you so much, everyone, and Luigi, we'll see you in the next video.